What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the QQQ, break down the report that's coming out for tomorrow, and talk about why tomorrow is going to be a massive day for the stock markets. We're going to make a massive move once CPI comes out. I'm going to give you guys the CPI details and break down why it's going to be massive and what you should be watching for as well going forward. Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, deposit any amount of money into the account. You're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is any could be a free Tesla share. It's a limited time offer. The offer ends in just 6 days. Check it out before they run out. But that's out of the way. Let's get on with the video. So anyways, when it comes to SPY, guys, this thing did close barely in the green. We did get an end of the day sell-off, and the market just closed a couple of minutes ago. And overall, this is actually still holding up quite nicely compared to where we were before. Now, this could be a good thing or it could be a bad thing as we are approaching CPI, and typically rallies approaching big events are not always the best of things. At least for the last 12 months, that tended to be the case. The real question is now, what's going to happen tomorrow? What should we be watching for? What are the important numbers? Now, tomorrow we're going to see a very big move, most likely in the markets, because CPI is coming out, and the market tends to get a very big move based off what the number tells us. I also want to note that when CPI comes out, this could even be a market reversal event, right? It could be, not a guarantee, it's just a possibility. But so far, just based off the numbers we're getting, we are consistently seeing increases month over month and year over year, and overall inflation is still too hot. Now, looking at the data, when people see this, they may initially think, oh, the data looks great, CPI inflation is slowing down. Well, not necessarily. That's not necessarily the case, in my opinion. And the reason for that is you first have to consider that the Fed's target is 2%. The last CPI that came out was 6%. That is still well above the Fed's target, which means the Fed is incentivized to remain still in a hawkish way where they're going to continue to raise rates. And maybe they could pause soon, but they're going to keep them high for an extended period of time, which is going to lead to lots of pain. And I believe that if the pain comes and it ends up being way too hard for banks and the economy, that is what could cause the Fed to pivot. That's when the Fed could actually cut a bit to slow down. And if they do that, once again, tends to not be the best of situations. But I want to talk about this for a second. When you see, inflation, you have to remember that it's just measuring the rate of change of prices. Now, the rate of change of prices was 9% back in June. All right. So is inflation slowing down? Technically it is, but prices are not going down. All this tells us is prices went up 9% in June, and then around February, they went up 6%. So they went up 6% in February. Listen to what I'm saying. They're still going up, just the rate at which they're going up is slowing down. And the Fed wants us to go up by about 2%. That's what the Fed's goal is. All right. So once again, it's still not that great. We're still way too high. The Fed still has a lot of work to be done. Now, when it comes to the data itself, it's coming out an hour before the market opens. The consensus and also the forecast, I think that's more important. The forecast for core CPI is 5.5%, and for inflation is 5.3%. So we want these things to start coming down. That's what the market is expecting. That's part of why the market's rallying. It's also because of the fact that the Fed may pause very soon. They most likely will, either during this FOMC meeting, maybe within the June or July ones. They're going to pause soon, and the market loves it, and the market's getting excited. But I want to warn you all, once again, excitement could be trumped by big data and the reality of the situation if it ends up being worse than expected. When it comes to gas prices, they actually went up by about, that's like almost 19 cents per gallon just in the month of March. So we're continuing to see gas prices going up. Since the year started, they've been going up and up again. Once again, that could drive inflation up. I don't believe that energy is weighing inflation as much as it was before, but at the same time, it still will impact it to a large degree. So the real question is, what's going to happen tomorrow? Well, this is basically my answer. If we get a 5.7% CPI, the market's going to crash. 5.5 to 5.6%, we're going to see another somewhat significant drop. Nothing too insane, though. I wouldn't consider 2% that crazy, but we are going to likely see the market reverse and slow down. If we get like 5.5% or something like that, if it's 5.3 to 5.4%, the market could still hold up nicely, maybe even improve if it's like on the lower end of this. And anything below 5.2% or as that is going to be good for the markets. The market could even continue to pump after that. Now, I don't know exactly how this is going to look, but I just want to note that the odds are favoring it being around this area. Now, core is also going to be very important, and it's going to be, in my opinion, possibly even more impactful than CPI in itself because we know energy is going up right now. And core is excluding food and energy. Core, all right, if we get 6%, the market's going to crash hard if we get something way too high on core. If we get 5.8 to 5.7%, we could see a pretty significant drop. I think core will be more impactful, but anything between 5.5 and 5.6% could cause a very mixed reaction. We could go up 1% or even down 1%. I wouldn't consider that too crazy though. And then 5.4% or less, that's what the market wants. We're most likely going to see the market respond positively to this, and we're going to see core once again help the markets. But what do I believe is going to happen? Honestly, guys, based on what the Fed is telling us, the Fed is warning us that it's most likely going to be around 5.6%. That's what the Fed believes. I don't know if they're right or wrong about it. And I do believe a lot of analysts are projecting inflation to cool off. So very, very mixed data. But I do believe the odds favor core being a tiny bit hot for the month of March. Commodity prices did go up a bit. That could be driving it. I'm not as sure about exactly what it's going to look like because, once again, it's very manipulated, but I do believe the odds favor it being a little bit hot. I'm not too sure about CPI in itself and maybe very close to expectations, but I do think core is going to be a little hot, and this could lead to a negative reaction. Now, once again, I don't know for sure, though. Once again, that's just my guess or my logical assessment if you want to go that route. I don't truly know, and that's why I'm prepared for anything. So if we're bullish, if the market is going to just continue to rip, SPY needs to break above 412 and eventually go all the way up to about 414. That's some very important resistance. If we're bearish, SPY has to break below 18.75. If it breaks below that, 406 is going to be a very, very important support. If that fails, if we get a break below the 50 EMA, once again, this thing could start coming down to fill these gaps. There's a gap down here around 403, another one down here around, this is 401, right? There's a giant gap down here to about 395. SPY has a lot of gaps below. Let's be very careful now. And once again, be prepared for anything. Be prepared for upside or downside. I just don't know which way we're going to go. I'm not even going to use technical analysis too much in this video. It doesn't matter as much for tomorrow, at least to start us off. It's just going to be a big reaction. The odds do favor, however, once again, be prepared for anything, but the odds are favoring the market may be coming down. It's a little bit more likely based off what the Fed is telling us. I don't know if we're going to gap up and then top and then come down, or if the market just reverses from here. I'm not too sure which one is going to be, but the odds are favoring downside a little bit more because, once again, the dollar is starting to break out a bit. The dollar is green. It looks like it wants to actually base around here and start pushing up. If we get high inflation, that could trigger the dollar to break out, which could be bearish for the markets. For Tesla, there's a gap below around this 184 level. If we're bearish, Tesla's going to fill that gap and retest 180, depending on how extreme it is. If it's a very bad report, Tesla's going to break below 176. If it's a great report, and let's just say CPI is super low, Tesla could break above 190, fill this gap to 192, and start to push for 195. I don't know which one it's going to be. I really don't know. But the odds are favoring. It's a little bit more likely. It's like I don't know, 55%. I would say 55% would be the likelihood of the market coming down. It's almost 50-50, and I'm just prepared for anything. Finally, I'm just going to talk about the QQQ and just a couple of others because I have to end this video quickly for today. For the QQQ, if we're bullish, this thing is going to retest 318. Break above that, I could see 320 to 321. If it breaks that, then 324.5 becomes very possible, right? If we're bearish, if this ends up crashing off CPI, we're going to be retesting around 313, the 313 zone. If that fails, there's this giant gap down here all the way down to about 307. If it breaks below like 313 to 310, we're most likely going to come all the way down to fill this gap. Now, what do I think is going to happen? The answer is I don't know, by the way. I really don't know. It's a very manipulated number. We are getting tighter on the QQQ. It did show some relative weakness today. The odds are favoring downside, though. It's a little bit more likely the market cools off. Just a little bit more likely. I don't know for sure, right? But the Fed was warning us core might be a little bit hot, so we might see this cool off a bit. I just don't know for sure, though. The VIX is green, up 0.69%. Hold on, let's just see what the VIX just did. On the hourly, the VIX filled this gap, came very close to doing so. We might see the VIX try to shoot up. If inflation is too hot, the VIX is going to shoot up, get a breakout. If it's not too hot, the VIX is going to come down. We'll see what this actually does. I'm still quite indecisive. Amazon held up quite nice today. It held 99. Bullish case would be, a push back to 104. A bearish case would be a drop below 98, taking us all the way down to the mid 90s, if not lower. There is this gap down here around 97, so we have to be very careful here. What's most likely going to happen? The odds are once again favoring downside. Lastly, I'm just going to talk about Aapl before I end this video, guys. I am sorry I can't record for much longer. I am actually pretty busy today. If we're bearish, Aapl is going to come down to fill this gap in the 157 area, retest 155. And for bullish, Aapl is going to fill the gap above, go up to about 164. So we have two gaps, one above, one below. I don't know which way it's going to go, guys. I really don't know. But the odds do favor. It's a little bit more likely we see downside, just a tiny bit more likely we're going to come and break below 160. That core is going to be a little hot. But if I'm wrong, then so be it. I just don't truly know. And with that said, I just want to thank you all so much for listening. All right. So please have a great day, guys. Please be ready for what the market has to offer. There's so much that's going on. And please remain calm, cool, and collected. Thank you all so much. The last thing I want to say is I have a new merch shop. You guys can see it down below. Hopefully, if you just scroll down, it appears right above the comments section. And if you're interested in buying some customized merch, custom merch by me, it's really up to you. I'm not forcing you to do anything, but it would support me and I would really appreciate it. But anyways, please have a great day. The market to the moon. The long term is still very, very bright. And peace out.